Hey, my name's James Nicholson and welcome to my channel. Now in this video, I'm going to talk about UK property investing for beginners. So make sure that you stick around until the end. I've got a very special free gift where you can get some free advice from me and help your investment journey. Now, as I said, I'm James Nicholson. I've been building a portfolio for 20 years now. And this channel is all about holding me accountable, showing you what's going on in my property investment journey. And so I want to ask you to join us on this journey. And we're also building a portfolio for my two daughters. I've got Georgia, who's 21. We just completed our first deal up in Doncaster. You can actually see all the videos of that on this channel. The property we bought, what it was like, how the refurbishment went, and all of that sort of stuff. And we're just completing our second deal very, very shortly. And so we'll be showing you all about that as well. And I'm investing for my daughter, Amelie, who is just one. And so how can you join us on this journey? Well, you can take that finger of power, spin it around over there, smash that subscribe button over there, hit the bell notification, and find out all the good, the bad, and the ugly, and just see what happens as we do these deals together. Now, you want to be a property investor, and I think that's a great thing. It's a good thing to be searching for content like this and finding out, is property investing for you? Now, I've been in business for 17 years now, and I've had all the ups and downs as a business owner. I've had a big failure in business. I'm actually a business coach as well, and so I cover that in my book, Expert Mastery. And one thing that's helped me as a business owner and personally is owning property. You see, business is tough, right? Business is tough, and I never would say business is for everybody, but property is probably one of the easiest ways to make money. Now, over the last few years, you've probably got friends that have made money in cryptocurrencies and done really well, right? And I have some friends in cryptocurrency that have made tons of money, tens of thousands of pounds. I've got one that's made hundreds of thousands of pounds and one that's made more than $1 million. However, very recently, their huge wins, some of them have got wiped out. Significant amounts. I mean, Bitcoin at the point of recording this video has gone down by 50%, which has never happened in the property market. And so that means you will struggle to get your money out sometimes of the market. Some people were not able to release that money, and they just saw the money go down and down and down every single day, which is really, really difficult. So cryptocurrency, I'm not saying that it's not a good thing, but I'm just saying it's not for me. Stocks and shares, let's talk about that. Now, on average, if you invest in the whole of the FTSE 100, which is the UK stock market, you will double your money every 10 years. That's brilliant, right? Doubling your money every 10 years is a good thing, and that's fairly consistent that that's happened. So let's just say you put 25 grand into the stock market, you left it there, and you just invested in what we call an index tracker, and that index tracker tracked the whole of the FTSE 100, bought a little bit of all the companies in there, and 10 years later, you've now got £50,000. Now, that's a good return on investment, and that's beating inflation, and that's better than having your money in the bank. So if you just want simple hands-off investing, then stock market could be for you. But you wanted to learn about property. Let's look at property in comparison. Now, if you had £25,000 that you could invest, that doesn't have to be your money as well. Remember, you might have parents that could lend you money, give you early inheritance. You might have friends or family that will lend you some money. But if you did have £25,000, then you could buy a property worth £100,000, right? And so we'd use something called a buy-to-let mortgage. And a bank would let you borrow £75,000 if you put in £25,000. Now, what that means is that you can now buy a house for £100,000, and that is going to be great. So you can buy a house, and on a 75 grand mortgage, you're going to have payments of a couple of £100 a month. Nothing too much to worry about there. Now, then you're going to get a tenant in, and you're going to, how do you find a tenant? Well, the easiest way to find a tenant is to just use an estate agent. I don't ever try and do anything myself. I have friends that have recently rented out their house, and he was looking around reading all these books about how to rent out your property. I was just like, mate, just use an estate agent. They have all the people that want to rent houses. You pay them a little fee. If someone doesn't pay, they sort it out. It's just so much easier to do that. So I'll always use estate agents to manage my properties. They've got all the plumbers and people like that that are needed if anything does go wrong. So then we're paying a small fee to them of around 10%. So you're going to then charge a rent. And if you bought a £100,000 house, you'll probably get about £600 rent. That's about realistic for that kind of size property. So you get 600 quid, you got 200 for your mortgage, you've got to have some money set aside for voids and repairs. So that might take 100, and the estate agent fees. So all the fees and costs would be around 300 a month. So you would be making £300 profit a month, which is 3,600 per year. That's pretty good return on the cash, isn't it? So if you think about it like this, you put 25 grand in and you get £3,600 back a year. Now, I know if I leave 25 grand in my bank, I will probably get about 80 quid, not even that. Like, if I was lucky, I'd get 80 quid a year in interest from the bank. Now, as an investment, I would make 3,600 comfortably. Very low risk, high probability of that. Very, very high probability. Now, what's next is the return that you can get from property. And let me explain to you. So on average, house prices go up in value, double in value every 10 years. Same as the stock market, right? So now you're thinking, well, what about all this hassle to just get a return that's the same as the stock market? Well, it's not that, because it's the house that goes up in value, not the money you invested. So you invest 25 grand, that gives you £100,000 asset. So in 10 years from now, that asset is now worth £200,000, right? £200,000, which is crazy. So you have a £75,000 mortgage. And when we're investing in property, we normally do it on a buy-to-let mortgage, which is normally an interest-only mortgage, because that keeps our payments down. So we're not actually paying off the debt, we're just paying off the interest. We'll talk in a minute about how you can pay the debt off. So now you've got a house worth £200,000, which is great, brilliant. And you're at the bank 75,000. You had 25 that you put in already. Now you've got 100 in extra equity. That means that your net worth is now £125,000, which is crazy, right? £125,000. Now let's look at some other numbers quickly. You'd have earned £3,600 a year in rent. That rent you'll have earned for 10 years, because we're talking about 10 years. So that's another £36,000. So you now have, I'm terrible at maths, you've got your £125,000 plus your £36,000, right? So that means you've made more than £150,000 back. That's 6 times the money that you put in. 6 times. 25 grand times 6 is £150,000. So that means you've 6x'd your money. Whereas in the stock market, you've only made it go to £50,000, which is insane, right? Now, what you would do is maybe release some of that equity, and you could do that way earlier than 10 years. You could do it in 5 years, but you release some of that equity, and then you will buy 2 properties. Now you've got 2 properties going up in value. You might have to buy 2 properties that are worth 200 grand, but 10 years later from that, those 2 properties are now worth 400. Oh no, sorry, they'd be worth £200,000 each when you bought them. They'd be worth £400,000 at that point. Now, in 10 years from then, they're going to be worth £800,000. Now, with property investing, there's actually a lot of strategies that you can use that would give you higher cash flow. So, for example, rather than making £300 a month, you could run it as an Airbnb and make £1,000 profit a month, or you could run it as a HMO, house of multiple occupancy, and make £1,000 a month there as well, which is crazy. That would give you, rather than getting £3,600 in a year, you would get, at that stage, you would be getting £12,000 profit off a property each year. And you can use all of these strategies combined. I mean, this is a lot to go through in the first video that you may be seeing from me. But what I really want you to take away from this video is property investing, and why you should be really going down that rabbit hole of finding out more about it, is leveraging your money and your time. Right now, I'm in the south of France. No, actually, I'm in the north of France. I'm in Calais, just charging my car over there before I go and get the ferry back to England. But I've been in the south of France for a week in Carcassonne with my family, with my two gorgeous girls, my girlfriend, and all of her family as well. We've had an incredible week out there. And while I've been there, my net worth is more than when I left home, because tenants have paid me rent through estate agents, and rental checks coming in, and just hitting my bank account. I've had no maintenance problems in the time that I'm here. The only thing that I've been dealing with while I'm here is new deals. I've been dealing with some new deals, but I didn't need to do that. I just wanted to do that, right? And so I could just have sat out for a month, and my income would have kept coming in, which doesn't happen in business. It doesn't happen in cryptocurrency. The only time in cryptocurrency you actually realize that you make any profit is when you sell, right? So if you have Bitcoin, for example, and you got yourself a nice Bitcoin, hopefully it hasn't gone down 50% in this year to date. First 6 months this year it has, but there's no income produced off that. You can't live off a Bitcoin, can you? The only way you can live off a Bitcoin is that it goes up in value and then you sell it and you get the money. Now it's not going up in value anymore because you've sold it. Whereas property will pay you rent. Every single month you're going to get paid rent, and that is going to give you passive income. You're going to have estate agents that can manage this stuff for you, because maybe you're not a plumber, I'm not a plumber, so when the boiler breaks, let's get a plumber in to fix it properly. You can get insurance to make sure if there's any major works, like the roof falls down, that the insurance company pay for that stuff. And so this is your first step to hopefully understanding property. I hope I've explained it in a way that gets across why property is so important as an investment tool for everybody. And I hope you're going to go down that rabbit hole, find out some more stuff. Actually, in the comments of this video, what I'll do is I will put a video where I just purchased a house in Doncaster for £60,000 that was worth £80,000. And when you look at that, it's an hour long. I'm not selling anything in there, just giving value in there. If you watch that video, you can see what did I do prior to the auction, what did I check. It's an online auction, so you can see my full screen while I'm bidding. And you can see on this channel, just to be certain that I actually did it, you can see first time I look around that property, the renovation of the property. You can see all the different stages that we went through, how we got the money back out. You should go and check out all of those videos and really find out how this property investing stuff can work for you. I hope you found this useful. Please do give me a quick like on the video. Smash the like button over there, guys. Why would I say that? Because it helps more people watch it on YouTube. When YouTube knows that you've watched this video and given it a like, it means that you liked it. And so it will suggest it to more people like you. And that motivates me to do more of these videos. Comment below with any questions you've got. I love questions. I'll make videos related to your questions. It really guides me on that, but I'll also reply to them. And go and check out the Property Accelerator group. It's a free Facebook group. You can join that in the description below. I'm James Nicholson. Go and check out this video right here and check out the video down there, which is the auction purchase. Thanks for watching. I'll see you guys very, very soon. Bye for now.